Have you ever wondered how empires rise and fall? We often think of great armies, brilliant generals, and powerful rulers. But what if I told you there's a hidden force, a silent engine that has shaped the destiny of nations for thousands of years? This force isn't a weapon or a political ideology. It's banking. Yes, banking. From the temples of ancient Mesopotamia to the digital transactions of today, the story of money lending is the story of power itself. Today, we are going to pull back the curtain and explore how the evolution of banking fueled the rise of the world's greatest empires and in some cases, led to their dramatic collapse. Our journey begins in ancient Mesopotamia, around 2000 BC. Long before coins were even invented, people needed a way to manage their wealth, which was mostly in the form of grain and livestock. The safest places to store these valuables were the temples and palaces. These institutions weren't just places of worship or governance. They became the world's first banks. Priests and royal officials would accept deposits of grain and, in return, issue clay tablets as receipts. But they didn't just let the grain sit there. They started lending it out to farmers and merchants, charging interest in the process. This simple act of lending and charging interest was revolutionary. It allowed commerce to flourish and funded agricultural expansion, laying the economic foundation for early empires like Babylon. The famous Code of Hammurabi even included laws that regulated interest rates and loan contracts, showing just how central banking had become to society. Let's fast forward to ancient Greece and Rome. The Greeks took the concept of banking to the next level. They introduced coinage, which made transactions much easier. Private entrepreneurs and even temples started acting as financial hubs. They offered currency exchange, took deposits, and provided loans. This financial innovation wasn't just for merchants. It helped fund the construction of magnificent structures like the Parthenon and even financed military campaigns. When the Romans conquered the Greeks, they didn't just adopt their gods. They adopted and perfected their banking system. The Roman Empire was a massive, sprawling territory, and its economy was incredibly complex. To manage it all, they developed a sophisticated banking network that stretched from Britain to Egypt. Roman bankers, known as argentari, set up shop in the Forum. They managed public funds, facilitated trade across the empire, and financed everything from aqueducts to legions. The stability and efficiency of this financial system were crucial for maintaining the Pax Romana, that long period of relative peace and prosperity. The flow of credit was the lifeblood of the empire, enabling its vast infrastructure projects and supporting its massive army. Without these early bankers, the Roman Empire, as we know it, simply couldn't have existed. But what happens when the banking system falters? The fall of Rome provides a sobering answer. As the empire faced political instability, constant warfare, and economic turmoil, trust in the currency and the financial system eroded. Debasement of currency, where emperors would reduce the amount of precious metal in coins to fund their expenses, led to runaway inflation. People lost faith in the money, and the intricate network of credit and trade that held the empire together began to unravel. Trade routes collapsed, economies localized, and the grand Roman economic machine ground to a halt. This financial breakdown was a major contributing factor to the empire's eventual decline and fall. It's a powerful lesson. An empire is only as strong as its financial foundations. After the fall of Rome, Europe entered the Middle Ages, and for a time, large-scale banking seemed to disappear. But the Crusades inadvertently changed everything. Knights and pilgrims traveling to the Holy Land needed a way to safely transfer large sums of money. Enter the Knights Templar. This powerful religious military order established a vast network of commanderies across Europe and the Middle East. A person could deposit their money at a Templar preceptory in London and receive a letter of credit, which they could then exchange for cash in Jerusalem. This was one of the earliest forms of international banking, a system built on trust and an impressive logistical network. The Templars became incredibly wealthy and powerful, acting as the primary bankers for European monarchs and nobles. They financed wars and funded kingdoms, showing that even in a fragmented world, finance was the ultimate key to power. The real banking revolution, however, began in Renaissance Italy. Cities like Florence, Venice, and Genoa became the new epicenters of global finance. This is where we see the rise of families like the Medici. The Medici Bank, founded in the 14th century, was a game changer. They perfected the use of double-entry bookkeeping, which allowed them to track debits and credits with unprecedented accuracy. They established branches across Europe, creating a multinational banking empire. They didn't just lend money to merchants. They financed popes, kings, and princes. Their wealth translated directly into political power. The Medici family ruled Florence for generations and produced 4 popes. They used their immense fortune to patronize the arts, funding geniuses like Michelangelo and Leonardo da Vinci, and in doing so, they literally bankrolled the Renaissance. The Italian city-states demonstrated how a mastery of finance could allow a small territory with no great army to wield influence far beyond its borders. From Italy, the financial center of gravity shifted north. The Dutch Republic rose to prominence in the 17th century, not through military conquest alone, but through financial innovation. The founding of the Amsterdam Stock Exchange and the Bank of Amsterdam in the early 1600s created the first modern financial system. The Bank of Amsterdam provided a reliable and stable currency, the bankguilder, which became the preferred currency for international trade. The Dutch East India Company, the world's first publicly traded company, was able to raise enormous amounts of capital from the public to fund its global trading expeditions. This access to capital allowed a tiny nation like the Netherlands to build a vast colonial empire and dominate world trade for over a century. They proved that financial might could be even more potent than military might. But no empire leveraged banking quite like the British. The founding of the Bank of England in 1694 was a pivotal moment in history. It was created specifically to finance the government's debt and fund its wars, particularly against France. The Bank of England allowed the British government to borrow money at a scale never seen before. This financial revolution gave Britain a decisive advantage. While other nations had to rely on ad hoc, expensive borrowing, Britain had a stable, institutionalized system for funding its imperial ambitions. This financial firepower enabled the Royal Navy to rule the seas and allowed Britain to build the largest empire in human history, an empire on which the sun never set. The City of London became the undisputed financial capital of the world, and the British pound sterling became the global reserve currency. The story of the British Empire is inextricably linked to the story of its financial system. So, where does that leave us today? The principles haven't really changed. Modern empires, or superpowers if you prefer, are still built on financial strength. The United States rose to global prominence in the 20th century, and its power is underpinned by the strength of the US dollar as the world's primary reserve currency and the dominance of Wall Street in global finance. The ability to control global financial flows, impose sanctions, and fund immense military and technological projects is a direct continuation of the story we've been following. And now, we see new powers rise, like China, which are actively building their own parallel financial institutions and promoting their currency on the world stage. The competition between nations is no longer just fought on the battlefield. It's fought in the stock markets, in the currency exchanges, and in the boardrooms of central banks. The history of banking is more than just a story about money. It's a story about trust, innovation, and power. It shows us that the ability to effectively manage and mobilize capital is one of the most critical factors in the rise and fall of civilizations. From the clay tablets of Babylon to the blockchain of today, the tools may have changed, but the fundamental principle remains the same. Those who control the credit control the world. It's a hidden history that's all around us, shaping the world we live in every single day. Thanks so much for joining me on this journey through financial history. If you found this fascinating, make sure to hit that like button and subscribe for more deep dives into the forces that shape our world. Let me know in the comments which historical empire's economy you'd like to explore next. See you in the next video.